Okay, it's 12 o'clock. Okay, welcome everyone to the final One Brooklyn Health Lunch and Learn for Black History Month. And this is your host, Sharon Lead. I'm the Director for External Affairs at One Brooklyn Health, and I am excited to bring our speaker up to the stage to talk about financial literacy. MCU has been a partner with One Brooklyn Health for many, many years. Many of you that is part of One Brooklyn Health is either a member of MCU or is looking to become a member with MCU. So I'm really excited to have Deborah Sinodinos here with us that is going to give us a full-blown presentation on credit and also on credit, as well as financial literacy, working with MCU. As I mentioned, MCU is a partner with ours. And so I'm really, really excited to have her here to talk to us today. So let me just give you a brief bio on Deborah. She served as a leader at MCU, where she has dedicated 14 years to expanding financial access and growing membership. With an additional 14 years of experience teaching preschool and managing after-school programs, she brings expertise in leadership, curriculum development, and community engagement. Deborah actively collaborates with local organizations, schools, and community members to advance financial literacy and promote the benefits of credit union membership. She is proud to support MCU's mission of helping individuals and families throughout New York to achieve financial stability and pursue brighter futures. Let's welcome our speaker and presenter for today, Ms. Deborah Sinodinos.
Thank you very much, Sharon. I am happy to be here. Always happy to be with the One Brooklyn Health community. And hopefully today will be a great presentation and everyone will walk away learning something new today. So just give me a moment. I'm going to share my screen to bring up the presentation. All right, can everyone see my screen?
Yep, we can see it.
Excellent. All right, great. Thank you very much. All right, everyone. Well, good afternoon on this snowy Monday morning. We today are going to have our financial empowerment workshop. As we go along, if you have any questions, I welcome them. Please feel free. Sharon, will you be monitoring the chat? Because I cannot see it.
Yes, I will be monitoring it.
All right, great. Thank you so much. So if anybody has any questions, please feel free. I like to have that interaction. So if there's something that comes up and there's something you'd like to share, please share with us, because quite often someone will share an experience they've had and it will be something new to me as well. And then I am able to take that information and pass it along in another presentation I do, something that I've learned. So this is not only about me being able to provide information to you, but there's always something that I seem to walk away with from those attending the presentation. So as Sharon said, my name is Deborah Sinodinos. I'm the Manager of Community Engagement and Partnerships here at MCU. So our agenda today is a little bit about MCU, a little bit about banks and credit unions, what they offer, how they are a bit different. Understanding your money. It's not so easy. It's not so cut and dry. And budgeting. I often associate budgeting with like being on a diet, right? You're restricted and people don't like to be on diets and budgeting, but very necessary budgeting is. Understanding your credit basics. I don't know if you realize how important it is to be monitoring your credit report, making sure you know what your credit score is, trying to get your credit score up as much as possible, because that will really help in other areas of your life. And then, of course, life happens, right? Your credit sometimes was great at one point, something happens. A lot of times it's a loss of a job, it's an illness, it's a divorce, and all of a sudden that great score plummets. But there are ways to fix it. You can always fix it. And then at the end, anybody has any questions, comments, concerns, I would love to hear them. So who is Municipal Credit Union? I know many of you are familiar with MCU. We spend a lot of time at Brookdale Hospital, but just for those of you who may not be, MCU is a 109-year-old institution. We've been around a very, very long time. When we started, we were founded by the then mayor, Mitchell, who felt that city employees needed a better way to borrow money than from loan sharks. They were the backbone of the city. They were running the city, making sure everything ran smoothly. But yet, when they needed to borrow money, the only place they could go was to a loan shark. And we all know that meant paying very high interest rates. We are New York's largest credit union. Early on, we had only 19 members. We are now over 600,000 members strong. And there are some things, though, that haven't changed here at MCU. Our values haven't changed. Our vision to be New York's most loved financial institution will never change, as well as helping New Yorkers build better tomorrows. And when I say New Yorkers, I mean every New Yorker. Many of you probably know MCU as the institution that you were able to get an account if you were a city employee or a healthcare employee. Well, about a year and a half ago, we expanded our charter. We were approved to expand the charter to include anybody who lives, works, worships, or goes to school in New York, which now, to me, officially makes MCU New York's credit union. So make sure you let family and friends know that anybody really who's in New York is eligible to have an account with MCU. There are a lot of great membership benefits, and we offer a lot of resources here at MCU. If you open an account with us, savings and a checking account, you are opening it without an initial deposit, and you are not paying any fees for the accounts. Our club accounts, for those of you who might be members at MCU, I'm sure you're familiar with our club accounts, our holiday and vacation account, extremely popular amongst our members. That's because those two accounts, you do not have access to withdraw money at an ATM. So for those of us who might not be as disciplined in savings, they are a great account to have because kind of out of sight, out of mind. They pay out once a year, the holiday account every November 1st, the vacation account every May 1st, and that money automatically transfers into your savings account, and then you have access to the money. We do not charge any fees for that. And what I like most about it is that if you needed that money before the payout, you can withdraw it. You just have to visit a branch. There's no penalty involved for withdrawing early. We're just trying to help you save. And we found that making it a little bit harder to withdraw your money helps people save. We have all the digital banking tools that are necessary to move your money: online banking, bill pay, mobile deposit, Zelle, ACH transfers, and we are also part of a shared ATM network throughout the country that has over 50,000 ATMs. So you will find MCU ATMs at all city hospitals. Brookdale Hospital has one as well. You will find them at a number of precincts. I believe the 73rd precinct is one of those that have an ATM, MCU ATM. However, if you are not close to where you can find an MCU ATM, if you visit our website or you go on your app and you put in a zip code, it will show you where all of these shared ATMs are. It will give you the location and you are able to withdraw money from them, and there are no fees attached to that. Besides all our great accounts, we also offer financial education, similar to what we're doing here today. We do a lot of workshops, especially for organizations. We come to some meetings, we'll do lunch and learns, and we can do any topic that is of interest, whether it's to your community or to your organization. You let us know, we'll work together on putting a presentation together, and we can deliver it for you. And we also do one-on-one confidential financial counseling if you'd like that as well. And we are really concerned with improving people's financial savings and making sure that they're saving for the rainy day, saving for retirement. So we offer CDs, a high yield savings account. That's only about a year since we've opened our high yield savings account. We also have IRAs. Our high yield savings account earns 3.2 interest. That's about 8 times the amount of a regular savings account. There are no fees to have that high yield savings account. And the initial deposit to open the account is $100. Once you reach a balance of $5,000, that's when you trigger that 3.2%. And once you've done that, it does not matter what your balance is after that. If you fall under that $5,000, there's no penalty, and you continue earning that 3.2%. Very different from a lot of other high yield savings accounts that are out there. We have a new 7-month CD that people love because your money's not locked away for a very long time. So these are some great benefits and resources MCU has to offer. And happy afterwards, if anybody wants to connect, you want to learn more about what we can offer, happy to do that. Oh, and I did not mention, of course, being able to save money with lower interest rates when you borrow here at MCU, whether it's a personal loan, an auto loan, a mortgage, a credit card. I can guarantee you that the interest rates you find at a credit union will almost always be lower than commercial banks. If anybody has any questions, happy to answer them. If you'd like to connect afterwards, that's great as well. So let's talk about a little bit about what banks and credit unions offer, because I am sure a majority of you have an account with a commercial bank, and that's great. You shouldn't change anything if you're okay with that. It's about having options, right? Bank currently might have an option for you that no one else had, and that's important. But you should definitely take a look at what credit unions offer too. So banks and credit unions all offer savings accounts, checking accounts, credit cards, personal loans, auto loans, mortgages. We also have home equity lines of credit. We have a line of credit and a fixed home equity loan. I mentioned CDs earlier. Commercial banks are insured by the FDIC up to $250,000, while credit unions are also insured, but they are insured by the National Credit Union Association in the amount also of $250,000, meaning your money is just as safe at MCU as it is in any commercial bank. Some of the differences between a bank and a credit union are your rates. Your interest rates are going to be higher when it comes to borrowing money. To lending, it'll be lower. And if you're looking for CDs, high yield savings account, it's very likely you'll find interest rates a bit higher. A commercial bank is for profit, while MCU is not for profit. And what that really means is that any profit MCU makes, we return that back into MCU for our members. That's how we keep interest rates low when you're borrowing money. That's how we eliminate fees on accounts, because we don't have shareholders like the commercial banks have. You have to be eligible to be part of a credit union. All credit unions have different charters. And like I said, we just expanded ours to include everybody who lives, works, worships, or goes to school in New York. We have a board of directors. They are volunteer. They do not receive pay to be on our board of directors. Anybody who has an account with MCU, if you haven't noticed, we refer to them as members. You are a member of MCU. You are not a customer, you are a member. You have a say in what goes on in MCU. You can join the annual meeting. You can ask questions. You can hear what the CEO has to say about what will be coming up in the future. Any questions on banks and credit unions? So understanding your money, not always easy, but very important. So first thing is understanding your money. You have to understand needs versus wants, right? A need is something that you just can't live without. Food, right? We can't live without food. Sometimes we get that a bit confused between our needs and wants. Sometimes we think something that is a want, we look at it as a need. Is it a need or a want to have a cell phone? Is it a need or a want to have shoes? Of course, we need shoes. Today we need boots, but do we have to have the most expensive? So it's things like that we need to look at. Transportation, it's important to be able to use transportation, right? To get to school, to get to work, but Is it easier to get in an Uber? Yeah, sometimes it is, right? It's a little bit nicer. Maybe there's less walking involved because an Uber is going to drop you off. However, can you take a train, a bus? It's going to be cheaper. It might not be as convenient. These are the things that we need to look at, right? So you have your needs as something that we can't live without, and then a want is something that is nice to have when all our needs have been met. So when it comes to understanding your money, what you want to do with your money, budgeting, it's real important to really sit down and look at your needs and wants. Needs and wants. Needs, right? You have to pay, needs have to pay for your rent, food, again, transportation. Of course, you need some kind of a phone, but do we need some of the plans that we all have? Do we need the phones that we have? It's nice to have them, but again, if you're looking to save some money, to cut down on some expenses, you might want to look at your phone and see if that's one area. Utilities, definitely a need, right? Electricity, gas, we need those things, water, but we can be mindful about how we use them. Now you look at your wants, things that are really nice to have. They can make life easier, more convenient. Eating out. It's nice to eat out, right? You don't have to cook, you don't have to clean up, but it can get expensive to eat out. We all have a lot of subscriptions, streaming subscriptions. Again, take a look. You think they're not adding up. It's $2 for this, $1.50 for this. But if you start looking at all of them and you add them up, you might be a bit surprised at what they add up to. New clothes and shoes. Like I mentioned, we have to have boots on a day like today. But for the amount of times we probably have to wear our boots, do we need to buy the most expensive? Yes, it's important to have clothes. It's important to have a coat. It's important to be dressed so that you're presentable. But again, sometimes we are attracted to those name brand things. And, sometimes there's other clothes that look just as nice, but they might be half the price because of the label. So these are the things that when you want to save money, these are the things that we need to look at. So now we know our needs and wants, or we're thinking about them right now, or at least I hope you're giving some thought to them, but let's prioritize them a bit. Let's look to see, if you prioritize your needs and wants, I think that's really helpful. And you can do that by creating a budget, allocate your funds for essential needs. A quick way to do that, there's so many ways that you could do that, so many budgeting tools available to us, but a very quick rule that I like to use is the 50-30-20 rule. So you look at your income, 50% of your income goes towards your needs, 30% towards what you want, and 20% for savings. Now that's just a general breakdown. People play with these numbers all the time. Some people do the opposite. They do 30% for savings and 20% for wants. You can change the 50% if you don't want to do that for needs. This is just a guideline to kind of get you started when you're thinking about needs and wants and where you want to save and how are you going to set this up? Where do you begin? I think it's real easy to use the 50-30-20 rule just to get started. So we're on to budgeting. I mentioned in the beginning that a lot of people look at budgeting kind of like dieting, right? You're restricted. You might want to have something, but you shouldn't. It's you've already set out a plan, and it's the same thing when it comes to budgeting. Budgeting is a roadmap to get you to your goals. It helps you track your income and your expenses. And always when we're talking about income, we're always talking about after taxes, your net pay, after taxes, after any money going into a retirement fund, any money going towards your benefits, medical, dental, all of that. It's what you're left with. And using that to create a budget is hard sometimes, right? But we want to make sure that we have a plan so that you can reach the goals that you want, and it will also help you avoid debt. Again, it's not easy. Everybody budgets differently. What works for one person might not work for another. There are apps out there that you can track everything. Some people like to do it by themselves on a spreadsheet. Some people just collect receipts and go through their receipts at the end of every month. But budgeting is important. It's important for you to know where your money's going, because I think when we think we know where our money is going, it's all in your head, right? You know what your rent or mortgage is. You know approximately what your electric bill is or your gas bill, how much money you pay for transportation. Those are the easy things. But are you paying attention to all the other things? Are you paying attention to every time you make a trip to Starbucks or to Dunkin', or every time you get breakfast on your way into work or lunch? Those are the things that I find people don't pay attention to. And what happens is those things add up quickly. I love coffee. I don't go into the office every day, but at least 3 times a week. But there was a time I was going in 5 days a week. And every morning I would stop at Dunkin' Donuts and get a medium-sized cup of coffee. And I didn't think, I thought that was pretty harmless, because I bring my breakfast with me and most of the time my lunch. So I felt I could treat myself to a cup of coffee. Then in the afternoon, I would want a second cup of coffee. And I would say, I didn't pay for lunch, so let me buy a second cup of coffee. And all of a sudden I realized one day that medium cup of coffee was close to $4. So I'm thinking, all right, that's $8 a day times 5 is $40 a week, times 4 weeks, that's $160 in 1 month on coffee. Is that really a need? No, that was more of a want. Not more of, I should say, that was a clear want. And that's a lot of money. Now, the biggest thing about that was that we had a Keurig in the office. So I could have brought coffee with me. We have a refrigerator. I could bring milk or half and half. So was there really a reason for me to spend $160 a month on coffee? Absolutely not. I can take that money and I can put it towards a bill. I can take it and put it in my savings account. Every bit more that I can put in is only going to help me. So what I did decide to do, because I do believe that there are some things we should treat ourselves to, we work hard, I decided to start that I would only buy 1 cup of coffee a day. So I split that immediately. I currently, honestly, I can't remember the last time I went to Dunkin' Donuts. I have cut that out pretty much completely. So that means I am saving $160 extra every month, which makes a big difference. So it's those little things that I think people pay the least amount of attention to, and they build up. So this is my friend Bill Dollar. I just like to use him as a quick experiment to show you what budgeting, how easy it is to get away from a budget and how easy it really is to budget. This is a very simple budgeting guide, a budgeting spreadsheet, whatever you would like to call it, but it's very basic. It's really pretty much what we all have. If you have a car, if you are renting or have a mortgage, if you're paying utilities, clothing, food, all of these things. Take a look at it. I'm sure you see many things on there that if you were creating this budget, you would also be putting on here. So taking a look at this, if you look quickly at part C, you will see that Bill Dollar's income is less than his spending. And so that's a problem. So he's spending more than he's actually bringing in. So looking at his spreadsheet here, I'm sure there are things that you see immediately that he can either cut back on or maybe even clearly eliminate so that he could start saving. What I'd like to point out to you is if you look at his savings, he's got nothing going into his savings. Now, Bill Dollar looks relatively young. So I know a lot of thinking on young people is that I have plenty of time. I don't need to worry about that today. I'm very young. I have a lot of time to make that up. Yes, you do have a good amount of time to save, but you can't make up. You're not making up what you've already passed. It's very unlikely that you will do that. That's why it's important to start from the very beginning. As soon as you could start saving for retirement, begin so that it will start to grow now. As when you're younger, you can put your money into things that are a bit riskier because you do have a lot of time to make it up if you lose money. But so when you put your money into something that's a bit risky, you also earn more money. So, there's that time for you there. And just for straight savings, an emergency fund, things happen unexpectedly. If you have a car and all of a sudden, that's your transportation to and from work or to and from school, all of a sudden your car is not working. Well, you want to get it fixed. If you have an emergency fund, it won't be a problem. Anybody have any comments about Bill Dollar's budget? Just a little thought for yourself. Are any of you here today, are you budgeting? Have you created some type of budget for yourself? It may be as simple as this. It may be on an app. It may be on the computer where you have a spreadsheet and have all these calculations. But I'm just wondering if you do. And if you don't, I'm hoping that you'll start to consider creating a budget for yourself. Sorry, I don't know what happened here. All right. Understanding credit. Very, very important to understand your credit report, understand your credit score, and how that credit score comes together. So basically, credit is your financial reputation. It's like your credit report is like a report card. It is showing you what you're doing right and wrong. Your credit is built by paying bills on time. It is about not utilizing too much of your credit limits. It is about not having a variety of credit, and it is about not having too many inquiries. Yes, your credit score is hurt significantly by late payments. I want to tell you that if you make one late payment, your score will drop anywhere from 90 to 110 points for one late payment. That is a big drop in score and can make a big difference in a lot of areas. It really does. What I will tell you is that, life happens, right? Sometimes, you get busy with something, you don't realize that you didn't pay, you missed a bill. Best thing to do is if you can automate them, but some people don't like to do that, or sometimes they feel they shouldn't because every month they make a different amount in their payment, so they don't want to automate. But automating saves you some trouble. It saves you trouble because you won't be late. So then therefore you don't have to worry about late fees, and you won't have to worry about your score being impacted for being late. But what I will tell you is that lenders do not report your lateness to the credit bureaus until you are more than 30 days late. So if you realize after 5 days you were late and you pay that bill, that is not being reported to the credit bureaus. Therefore, it won't affect your score, which is a great thing. And of course, always, if you are late on a payment and you are not habitually late, you should definitely ask for courteous removal of the fee. And majority of the time, they will do that if you are not somebody who's always making late payments. So basically, having good credit gives you more options and definitely will cost you less money because you'll get better interest rates. So your credit report. Has everyone here, do you check your credit report? Do you know how to check it? Do you know that you are entitled to one free credit report every year from each of the credit bureaus? And there are 3 credit bureaus. So I want you to keep that in mind because it's a great way to make sure that what's being reported is correct. It's a great way to find something that doesn't belong on your credit report because you're checking it at least 3 times a year. Credit report agent and agencies. The three credit bureaus are Experian, Equifax, and TransUnion. They each probably will have a bit of a different score. And the reason that you will find a different score for each of these is because not every lender reports to each of the credit bureaus. And that's fine. You might see that Experian might have you at 700 and Equifax might have you at 675. That's fine. It just because not everybody's reporting to the same one. What I will tell you is if there is a large difference, a big difference between one, you should check that out. Categories of information on your credit report will have your personally identifiable information, meaning your social security number, date of birth, things like that, your name. It'll have all your accounts. It will have your credit inquiries from the past 2 years. Inquiries only stay on for 2 years. And they have public record of any kind of collections, alimony, child support, things like that. It will show everything about any accounts that you have, not your bank accounts, meaning any time you borrowed money. So your personal identifiable information, known as PII, is your name, your address, your social security number, and your date of birth. Does not matter, does not say if you're married, it does not say if you are the president of an organization or not. None of that matters when it comes to your credit report. So what's on your credit report, or should I say like your report card? So, and I can't say it, I'll say it again. Every account that you have, every credit card you have, every loan that you have, your payment history, have you been on time? Are you 30 days late? How many times have you been 30 days, 60 days, 90 days late? Is there an account in collections? All of that. How many more payments do you have left on an installment loan? What is your monthly payment? It has all of that. How long you have credit? What's the longest, maybe the credit card that you've had for the longest. So, and remember that. Remember also, anytime that you're about to make a large purchase, and those usually mean a mortgage or a car, what you want to try to do is not have any inquiries on your credit report that are less than 6 months old, because that impacts your credit score the most. If you have a inquiry on your credit report and it's from a year ago, yes, the lender sees that, but it doesn't make that much of a difference on your score. If you have one from 2 months ago, that's going to impact your score a bit differently. So I always recommend, if you're thinking of making a large purchase, do not put any new inquiries on your credit report less than 6 months. So maybe you're not so happy with your credit score. Maybe you say, you know what, I want to buy a car. I know to get a better interest rate, I have to get that credit score moving. So what you are going to do is make sure that you have your most updated credit report and you have gone through it. And we're very thorough to make sure every account on there is that is your account. You don't want to wait until you're at the car dealership and say, yep, this is the car I want. I love it. Please, this is what I want to buy. And then you find out that either your interest rate is sky high and you can't afford the car, or you were just simply denied because of something that's on your credit report. You want to take care of all those things prior to making a purchase. Make sure you pay those bills on time. Remember what I said. Your credit score can drop 90 to 110 points for one late payment. Keeping your credit card balances low. If you are, let's just say you have a credit card and your credit limit is $5,000. You say, oh, great, I could spend $5,000 on using this credit card. Yes, you can. That's what the credit card company is saying, that they will provide up to $5,000 for you. However, if you are using more than 30 to 40% of your available credit limit, that is going to impact your score negatively. So just keep that in mind and try your best to stay under 30 to 40%. You don't want to apply for too much credit. You don't want a lender to come in and see that you've had 6 credit inquiries in the last 6 months, because that's like a red flag to a lender. Like, well, why are they looking to borrow money? Why do they need to have so many credit cards? These are things that a lender will definitely look at. And of course, fixing your credit report. If you fix your credit report, if you notice something's on there that shouldn't be, you can get in touch with the credit bureaus. If you have documentation, you provide it. When they fix it, it's going to help your credit score. So just keep those things in mind. Something that has become more and more popular is protecting your credit, right? You don't want someone to get a hold of your credit. You don't want to find out that you have 4 credit cards that you actually never applied for. And that's by putting a credit freeze. So what happens is you put the credit freeze on, and nobody can do pull credit without you being notified and providing usually a PIN in order to get into it. So a lot of people have been doing this. It used to be that people did this only after their credit was, they had a problem. Somebody got into their accounts. Now people are saying, I don't even want to get it to that point. I want to protect my credit before anything happens, because it can be a big headache. And that's what they do. So if you, let's just say you have a freeze on your credit and you forget that you have that, because that happens all the time. You apply for a loan. What's going to happen is whoever you're applying with is going to come back to you and say, we are unable to pull your credit because it's locked. You'll do the thing with your PIN, and you unlock it for a period of time so that a lender could do their inquiry and provide an answer for you if you're approved or denied. So this is what your credit score looks like, right? You have the 5 categories that are looked at: your new credit, length of credit history, your payment history, credit mix, meaning, what types of accounts do you have? You don't want to have too many credit cards. You want to kind of have a variety, kind of like a student. When we say be well-rounded, that's what the credit bureaus are also looking for, somebody who is well-rounded. It's having a loan is a bit easier than having a credit card at times, because your credit card balance can change. So maybe, maybe 1 month you had no problem paying it, but then all of a sudden you had to use it a little bit more, and now it became a little difficult the next month. An installment loan, every month what you have to pay, when it's due, and for how long you'll be paying it. So a little easier to budget for. So that's what the credit bureaus are looking for. So I just want you to take a minute, look at this pie chart, and think about what you think goes where. Which section is 35% of your score, makes up 35? Which one do you think makes up 30%? And just to see, this is how your score comes together. This is how it is determined. And remember what I said about that payment history, that's a huge chunk of where your score comes from. So I'll just give you a minute to just, look at that and see if you can figure out what's important and what's not as important. All right. And here's your answers. So I'm sure you're not surprised. Payment history is makes up 35% of your score. If you go to the next one, it's amounts owed. So I was talking about that credit utilization, not using more than 30 to 40%. So just between payment history and amounts owed is 65% of your score. So it's very important to make those payments on time and to watch your credit limit. And next in line is your length of credit. Now, I get this question a lot. If you have a credit card and you've had it for a long time, you've gotten your balance to 0, you say, I don't want this card anymore. It brings back bad memories of a time where I had a high balance, and you want to get rid of it. Well, the problem is, once you get rid of that card, and when I say rid of it, you close the account, not just getting it to 0, you've closed the account. What happens is you lose all that credit history. So if you've had that card for 10 years and you get rid of it, and your next credit line your next credit line, you only have for 3 years, that means you've only had a history of borrowing money for 3 years. And that could impact you negatively if you're applying for something. So try to keep those cards active that you've had a long history with so that you can keep that history. Once it's closed, the history is gone. Credit mix, that's being that well-rounded consumer, having a couple of credit cards, a couple of loans, not having a ton of either. They want to see you manage everything. And then new credit, meaning inquiries. Like I said earlier, if you have a lot of inquiries, a lender is going to notice that and wonder why you have so many inquiries. And also it could mean maybe you applied for 5 new credit cards. It could mean you also have 5 new credit cards. And even though those credit cards might be at 0, don't forget there's available credit for you. That lenders sometimes worry, does that mean you're going to end up in debt because you have all of that available credit and it's new? What was the reason for it? So you have to be strategic when it comes to your credit score. Any questions about what impacts your credit? Building and improving your credit. I get this all the time. You can have a great credit score. You could end up having a bad credit score, but just know that that could happen to you 100 times, but you could fix it 101 times. It just takes some patience and time. Unfortunately, the way a credit score drops, like that 90 to 110 points because you made one late payment, it doesn't go up that way. If you have 1 month where you made all your payments on time, that score is not climbing 110 points, unfortunately. So credit improvement and repair, it's just the process of fixing your credit. There are a lot of ways to do that. It's important to get your credit score up if it has dropped, because if you need to borrow money, you want to get the best credit, your best interest rates that you can get. Also, at times, your credit score can impact a job that you're going for, especially if it's in finance. If your credit score is not good, you could very likely not be offered a job because of that. So there's many reasons, and you want to make sure that you're keeping your balances low and that you're doing everything you can to keep that score as high as possible. So we already went through this. This is how your score comes about. And in order to have a score, you have to have at least one account open for 6 months. So building your credit, you want to keep that utilization 30 to 40%. It says here 30%, but as long as you're under 40%, you're okay. Make your payments on time. Auto pay is the best way to do that. Avoid too many inquiries. Avoid closing accounts because you do not want to lose that history. MCU also has what's called our MCU Credit Builder Program. We do not have a secured card any longer. We had that a couple of years ago, but we have this new MCU Credit Builder Program. What happens is it's as if you're applying for a loan with us for 1 year for $1,200. Each month, you make a payment of $100 to this account. What happens is we report those payments to the credit bureau every month, which will help your score go up. And at the end of those 12 months, we return that $1,200 to you. So it's kind of like a forced savings as well. So we've helped you help your credit score a bit and helped you save a little bit of money. And, with the credit builder program, similar to the secured card, you don't have to worry about being approved or denied. And it's not a hit on your credit because we're not doing a credit inquiry. Does anybody have any questions about anything that we talked about your credit score, about fixing it, about anything at MCU? Somebody who might have an account with MCU and you have a question about your account, you can always connect with me. Here is my information. Email me, text me, call me, however you'd like to communicate is fine with me.
Okay, do we have any questions? You could put them in the chat box, or what you can do is just raise your hand and I'll bring you to the stage and you can ask your questions. And while folks are looking to see if they want to either put something in the chat box or in the Q&A, Deborah, we also have an MCU ATM machine at our Interfaith campus as well. So for those of
Oh,
you
that's right. I
who,
forgot.
yeah, so we have it both at Brookdale and we have one at Interfaith. So, feel free to utilize both ATMs at your leisure. Other than that, it doesn't look like we have any questions. Looks like you knocked it off the ballpark, Deborah.
Well, I thank you for having me today. I thank you for giving me the opportunity. And I'm very sincere when I say that if anybody would like to speak one-on-one, please, give me a call or send me an email. We can set up a time over the phone. Or, if you want to meet or in person, I have no problem with that. Or even if you'd like to just meet virtually, I can do that as well. You're on mute, Sharon. Sharon, you're on mute.
Thank you. I said, thank you again, Deborah, for all what you are doing with us through MCU. And just a reminder to everyone that this is a recorded, so this will be put on our YouTube page as well as it will be sent out on our OBH News. So please let your other colleagues know if they are interested in learning more about some more programs and initiatives that what MCU is offering, they'll be able to find it out on this Lunch and Learn today. Once again, everybody stay safe, stay warm, and again, thank you, Deborah and MCU, for all your support.
Thank you very much, everyone. Have a good day.
Bye.
Bye.